Hi, Warriors. Thought I'd say hello to everybody. How's everyone doing? Hope you had a good week. Hello, team. Hi, Steve, Mike, Ryan. Hi, Bran, Andrew, AJ K-Man's here. AJ Kale, welcome to Face. Stell's here. Hi, Sinatra, Glenn, Timothy, how are you? Rob, everybody. Hope everyone's in good shape. Yeah, a lot of crashes this week, huh? All right, so let's take a look around. And we're trying to turn the currencies a little bit here, probably because of yields. I don't know if I would, get long on a Friday, but I wouldn't be short either. So, we have a lot of guys here to talk about what they're thinking. You guys know, I'll just leave it with one thing. Um, we're recovering in S&Ps pretty good too. So this was NVIDIA. So they're trying to turn it. We had a breakdown. Talked about it yesterday at 61.8. This is what triggered the crash. See if they're going to be able to hold it. And you know what, guys? For almost 6 months, I was playing the short side of Uber. I was not wrong directionally. It just took so much time. Look at this top, how long it took. There's a weekly. We finally have a breakdown. And, I think this opens the door. A lot of people are looking for 80, some people looking for 70. I think it's actually possible that we see $60 Uber before this is over in January. So, Stel, good morning to you. You want to update us on what you're thinking here today?
Good morning. Before this is Uber, we're over.
Okay, there
So
you
that
go.
was a bad joke. Bad joke.
No,
Okay.
no, it's good, man.
All right. So yeah, it's been a couple of very interesting days, and it just shows you that when I don't want to call it panic, but when selling comes in, you get some pretty decent daily moves. And there's this story, well, headlines flying around that the Russia-Ukraine deal is not on. The Ukrainians and the Europeans are not accepting what um, the Russians and Trump are proposing. So there's not a lot of good news out there. Let's put it that way. The only thing that's saving, I think, markets at the moment is the fact that yields are not going higher and yields are going
Yeah.
a little bit lower still. I'm still long TLT. I know I'm wrong about 420 in the yield, and if that happens, then I'll take a small loss and move on. But let's see.
TLT held a breakout, buddy. If you could just pull up TLT, I'll show you what I'm looking at. So if you draw just a straight line over the highs in like July and August,
Up there. Yeah.
no, just a flat
Oh,
line at the top in
oh,
July.
here.
Yeah, just put a horizontal line in there.
Okay, got it. Hold on. Let me put
So
it
that
in
was
something
an
there.
that was an ascending triangle right there. You had an uptrend and then it gapped and broke out,
Yeah.
held a retest again. So to me, that's my line in the sand on TLT. It closes under 88 and a half.
Yeah. Yeah. Fair point, actually.
Yeah,
Fair
so I
point. But
thought I just would share it with you
th
because you're doing.
thank you very much. Thank you very much for that. I mean, yields are still looking like they're trending lower. Of course, we had the FOMC minutes and Goolsby saying that the inflation target is 2%, not 3%. So that the market kind of got a bit spooked with that. But then again, Williams today said that a December cut is definitely one of the options. So we're kind of caught in between Fed members, but more or less, I think the trend is for us to see a little bit more hawkish talk. Then again, the Fed has been talking hawkish on occasion, on quite a few occasions, but then delivering the cuts. So, do I think what the market's pricing is fair? I think so, but the first cut is now priced in for next year, if I'm not mistaken, not for December. So So
Okay.
this definitely is bringing a little bit of strength to the dollar. Not a huge amount, but this is the 200 DMA, so we've broken above the
Yeah.
200 DMA in Dixie. Not a not an insignificant event.
No.
And so I still have a bullish bias on the dollar, not a massive one, but I still think for choice we're going higher in the dollar, and not probably not today, but look at the euro dollar where it's
Yeah.
sitting. It's below 114.75 or so. We then open the trap door for lower levels, but of course we are still 50 pips away from that. Um, Equities have been interesting. I've been saying in the chat room today and yesterday, 65.30 is the level in the S&P for me. We broke
Holding
below
it.
today. We're right back
Yeah.
above. Yesterday we held at that point, which was actually what was the low yesterday? 65.35. Okay, almost at that point. Um, we broke below today, but now we're rallying back up. So there is a little bit of buying coming in. Um, I don't know what's going to happen. I think most likely we go lower, but it's all down to a handful of stocks and how they perform. And Nvidia had very good results, or at least better than expected. And Nvidia is what is it? A half of the index, or I'm joking, but it's a huge chunk of it. So we wait and see what happens to those few individual stocks, the mega stocks. But I still think that indices overall are quite overvalued, and that if eventually we should see a healthy correction lower before we move higher again. Um, let's have a look at metals. Gold is trading a lot better than silver, that's for sure.
Gold silver
But
ratio.
gold silver ratio is at 82.
That's what turned it
Yes.
into gold's favor.
Yes. So gold is always trading more, well, with less volatility than silver, and it is trading better than silver in the last few days. Silver has been it's had a couple of pretty bad days. The big question is the $50 level, which everybody had been talking about for years. Oh, silver is going to get to 50. Even the biggest bulls, where we got to 50, and we went up above. The question for me is if we manage to get a weekly close below 50. That's going to be pretty important because I tell you what, if I was long silver here and I saw this 4A at 54, then back down, then again almost 54 again, and we're back down below 50, I would be very, very nervous. Actually, in fact, I would be getting out. So I think today's close is going to be significant. And if we, as I said before, if we do close below 50, big psychological level, I think we probably keep moving lower. Following that, of course, if risk gets bid, if equities start going be super bid, I think metals will follow. But all else being equal, I think that silver is still not looking great. And although I'm bullish in the medium term, of course, I am definitely looking for lower levels to reload my longs. And I know they sound a bit crazy, but I'm looking somewhere between 41 and 42.
No, it's not
So
crazy. Who
yeah.
okay, let me make a phone call to the mental institution. Hello, mental institution. My good friend Stelios needs to be stabilized. Can you get over here to Greece? All right, you'll be okay now, man.
Yeah. And we have to talk about cryptos because they've been the one that's been selling off the most. And for people who are Forex Analytics subscribers, you will know I updated my macro view and my bias to bearish as soon as we broke below 100,
Yeah.
and we just keep going. Um, we are getting close to a very important area, though. 75 to 77K ish, I think, is huge. And as I wrote this morning in the chat room, if I'm not mistaken, Michael Saylor's MicroStrategy is long at somewhere around 75 or 76K. So that coincides there, and you can bet they're going to be defending that. So if you want to get long Bitcoin, I'm actually considering it. I know it sounds crazy for me. I've never really touched these, but I think if we get to 75 to 77K, I'm going to definitely try and take a long there and see what happens. But for now, I mean, look
All
at this.
in. Bet the
Don't
house,
you,
Stelio.
don't tell. Oh, I was going to tell you not to tell Steve.
I never thought
Steve
I,
heard.
I never thought I'd say it, but I think risk reward it looks like a nice level to do. But of course, I'm going to be doing a quite small size because
I agree. Worst case scenario, you lose 100%. I mean, it's
exactly.
not that bad.
But I
And
mean,
you will buy 10 bitcoins.
yeah. But look at that. I mean, in a month and a half, we're going from 125K to 83, which is crazy. So, you can say a lot
Yeah,
of
to
things
be
about,
honest,
yep,
we've seen this type of moves many, many times
yep,
from
yep.
cryptocurrencies, and I agree with you. Bitcoin isn't going away, right? I mean, it has been now established as I've said before, we have thousands and thousands of cryptocurrencies. In my opinion, the vast majority of them eventually will end up at zero, right? But I don't think Bitcoin is, really one that can be going to zero. It has gained a lot of traction.
Yeah,
It
it's
has a
been
lot of
adopted.
yeah,
Institutional
it's
adoption,
been
yes.
it's been broadly adopted. So
Yeah.
although the vast majority of cryptocurrencies will end up going to zero, I don't think that Bitcoin or Ethereum anymore, are in danger of such an event. Now, of course, they can depreciate substantially from here because don't forget that they are assets that have no intrinsic value. But that's a different story.
Yeah, it's a great speculative asset. It's amazing actually. It's a lot of things, but store of value, very difficult to claim that with a 30% drop in a month or so. So, you
Yeah,
know,
and we've seen 50 and 60 and 70% moves, right?
yeah.
Yeah. It's the most
Yes.
reflexive instrument on the board.
Yes. And Ethereum is a similar story, big drop as well. It's currently sitting at the 61.8. So, and also the previous highs in June. So, not a bad level here as well. I guess this is why we're probably seeing a little bit of a reaction from today's lows, but overall it's still not looking bullish in any way whatsoever. So I would be careful and I would not, rush to get in and and buy the dip and say this was it, generational low. I don't think so. I will agree with Steve. I think there is still potentially downside and probably better levels to get long. Yeah, that's pretty much it from me. I don't have much else to say. Talked about yields, talk about the S&P, crypto, dollar. Yeah, that's pretty much it. I don't know who else wants to take over. I heard
All
Greg
right.
as
Well,
well.
Yeah,
yeah,
I heard Grega's voice as well.
I'm going to bring Greg in the last 10 minutes. I'm going to talk to K-Man and Ryan. They're sticking around on a Friday, want to get their view of the week and a look at the week ahead, and then we'll go to Grega. Oh, okay, Grega, I guess it's your show. Go ahead.
Yeah, I mean, I saw the chance to share the screen, so
Okay, go ahead.
yeah, basically, since you were talking about Bitcoin, I also think that we are just stepping in this very new bear phase based on these cycles. So as we discussed in the past, that each from 2014, each bull cycle lasted exactly for 36 months, and even this latest cycle has topped out exactly after 36 months in October. And what we are seeing right now is just breaking this channel support here connected from 2022 lows. So apparently, because corrections fear, as you know, causes a very sharp drop. Of course, the corrections may not last such long compared to the bull cycle. So maybe like in the past, 1 year of correction could be enough, but of course this in the meantime you could see a drop 70-80% easily. But as the price goes higher and higher through history, the pullbacks tends to be smaller compared to the previous cycles. So I would be looking maybe for the first support after around 50 or 60% of retracement from the highs, and this could take us back into this range around 50 or 60,000. So that would be
Wow.
ideal for potential stabilization down here. Of course,
For next year, you think,
at
you're
the
talking about a 12-month corrective period?
I think
Start.
that if I would be looking for any kind of longs that would maybe plan to hold them for 2 years, 3 years or more, I would definitely wait till end of the next year.
End
Because
of 26.
yes, exactly. Because I
Okay.
also assume that now when we have the cryptocurrencies turning to the downside, there's also big risk that stocks will also topped out in the first phase of 2026. And of course, if there will be some massive any kind of a corrections on stocks, I just think that of course this one will easily stay in corrective mode for the whole 2026 year. So of course, it's not easy to buy the falling knife, but I mean,
Well, you have a
levels,
year to think about it.
yes, exactly. But we still have to focus not just on time, but also we have to focus on price as well. So it really depends how fast we reach some of those super levels. Because if we just try to focus on the levels itself, then as I said, that this 50,000, 60,000 could be very, very interesting. It really depends how fast we will continue with this decline. But I certainly think that the big bull run is going to stay here. We just have to be patient, and we are always somehow afraid that that's it whenever we are seeing this massive reversal like it's happening right now. Also,
How
what
about S&Ps?
S&Ps? Yes, here it is. So the S&P basically, what has happened here, let me look on the 4-hour time frame, is that we basically retested these lows. It was the gap on the futures contract that was filled recently. So it was that sharp sell-off on Friday, as you know, when cryptocurrencies also have seen a massive sell-off, and we just retested this level. So if we are really going to resume higher, that's the level that we have to stabilize. Okay, so I just think that today's price action will be very important. I think there were some comments from Fed Williams that, let me check, that they can still cut rates in the near term. So maybe some comments like this could maybe support the price action to see some kind of a rebound. Of course, markets are always very sensitive to news, but I think that any kind of a positive news after such a drop could easily make some interesting short covering rally here. So I'm not calling a top yet. I think that some reversal, some rebound will follow. Ideally, we will see, as I said, maybe another lag to the downside. If we are in a wave 4 here, these supports, we get maybe another final push up into the wave 5. So that's definitely a very important zone for the next few days, few weeks. Here we also have the German DAX also at key support levels. So turning aggressively bearish down here, in my opinion, it's definitely not the place to look for unless we see some weekly bearish close well below 23K. So then this would be a different story, and likely this correction will extend even lower. But technical levels are definitely very, very well defined here in this range.
Dollar?
What it is here. Okay, so the dollar, I'm surprised that it's not higher that much like you would normally expect with this kind of a volatility that we have seen. Even VIX, it moved up to 28 or so, if not even more. So dollar is still, it's just testing resistance. It's not really breaking higher yet. We could be either here in late stages of wave C. We are, as you can see, these levels, if you go back to 2023, 2024, you are at this potential resistance here. So I think that there is a chance that we will see some drop, but of course I cannot rule out that maybe what if that was an ending diagonal. But I still think that, as I said, some retracement will show up, and it will be my mission to discover after the retracement where we go afterwards, if the drop will be corrective or impulsive. So I think that these are very important levels. So as I said, dollar index here at that levels, the S&P 500 at this one, and calling an important top up here would be, I think, at least at this stage, a bit too early.
Okay. What else? I know I've been making requests. What do you want to show?
Yeah, I can take a look on maybe on gold real
Okay.
quick and silver. So gold basically made this overlap with 4040. So it just confirms that we are still in consolidation phase after we retested and then turned back to the downside from that trend line resistance. So I think that this correction will either transform into some kind of a triangle or maybe even deeper retracement towards 3,800. But the important is that this correction is not finished. Even if you go to the smaller time frame here, we can see an impulsive sell-off. So I think that definitely bulls are not ready to come back just yet. But if we'll see any next big drop, I would be looking for stabilization, as I said, down here somewhere around those October lows. Also, what is important still here, as we already discussed last time, that we are still testing this trendline support and on gold silver ratio, and
Yeah.
looks like that this wave C here is missing.
Right.
So this could easily keep correction still that will last.
Keep the pressure on silver.
Yes, exactly. So that's the silver here. But we are always, not always, but at these important highs, that's basically high from that 2011. It's not really surprised that we are just seeing this kind of volatility on both sides. So maybe just we need to liquidate more of those who are on the long side before market may finally complete this fourth wave and then see another push higher sometime next year, in my opinion.
Okay. So basically maybe look for recoveries in a lot of markets into the end of the year.
Yeah, I mean, maybe we get Christmas rally. I mean, we
Yeah.
definitely pulled back pretty nice so far. So, as I
Well,
said, at least some rebound, it's certainly probable.
well, there's a expression, the bears feast on Thanksgiving. That's next week, and the bulls on Christmas. So maybe the market going lower, we're already hearing the signs of, we can ease. If we were still trading up around contract highs, I don't think you would have heard that statement come out this morning. So thank you, bro.
Thank you. Thank you for having me.
Yeah. Oh, do we have Grega or what? Huh? We have him. All right, buddy. Well, thanks. And do you think that there's been enough unwinding of leverage for this to be the low, or do you favor one more shot down in S&Ps more like towards, I don't know what. If we break 65, couldn't that take us to 62?
I
You're
just
not
think,
looking that deep, huh?
I mean, no, I think that, as I said, these levels, 400, maybe slightly
Okay.
lower, this must hold. Because if you
Okay.
see a wave 4, let's say going down here, then it would not fit ideally
For
to this wave structure. It would most likely then suggest that we are in a higher degree correction rather than the same degree like this wave 2. So
I got you. All right. So it's about degrees.
yes,
Okay.
clock is ticking
Magnitude.
here.
Okay. Thank you, Grega.
Thank
All
you.
right. Ryan, how are you, buddy?
Yeah, morning, sir. How you doing?
Good, good. I would like to know what you're thinking on this Friday, going into the weekend. We've seen all this action this week. What's a takeaway for you from this week's trading?
Well, the takeaway is we've got a few answers to a few things, a few more questions to others, but we might be shifting through different phases. So the Japan thing and the fiscal spending, that all looks like we know what's coming now. So the market can move away from that and decide what it wants to do. It's helped dollar yen come down, yen pairs in general ease off a bit. No one's saying we're out the woods, because that's, as you can see from that chart you've got there, this is just if you just take it from the end of September, October rally, that's just
Yeah.
a minor pullback.
Right.
But change has got to start somewhere.
Yeah.
So yeah, we're over that hump at the moment. The Fed game, We're getting a few Fed heads out, and those rate expectations are swinging about quite a bit. We were leaning towards keeping rates unchanged yesterday. Then today it moved back into the middle, and now Williams has come out talking a bit dovishly, so we're moving again, and the market's just swinging about. But we're getting the FX up, FX down, other assets up and down, but just keep an eye on those 10-year yields. They're going to give you a clue and tell you exactly what's going on. And at the moment, they're not going anywhere. And we've also got this, well, it seems to be blown out the water already, but this peace plan that's been floated around got the market a little bit excited this morning that we might finally get a deal done. But as I say, that's at the moment been shot down. We'll wait to see what Trump has to say about it when he wakes up. So yeah, keep an eye on risk.
Hey, Greg, if you're still here, is this corrective in the 10-year yield and we could still make a move above 420? If you're still around.
Yeah, I'm just watching. Yeah, I mean, it looks like we even could count 5 waves up from that. What was that, October low?
Yeah.
Yeah, it looks like 5 waves up, and this can even be a counter trend 3-wave movement. So it looks like we could see a bounce here from what, 4.05, 04?
Yeah, I know a lot of people have like 435 targets. That'd be enough, and then maybe that's it. Anyway, I was just curious what your take was on this because this looks just like consolidation.
Yeah, exactly.
All right. Okay. All right.
Oh,
So Ryan,
by the way, Dale,
what are you going home with?
by the way, I was just going to say, Gregor's coming over to the UK
Right.
in December, and so we're going to meet up for a couple of beers if anyone's about. I'll put the details out near the time, but you can come and meet Gregor in person.
Yep. Cayman is muted.
Oh, are you calling me, Dale? Good morning, everybody. Afternoon.
Conditions are accommodative.
Are you calling me, Dale?
Oh, Dale's disappeared.
Dale is out.
Dale has gone.
Dale has left the building.
Uh-oh.
He's back.
Are you back, Dale?
Yeah, I don't know what happened.
I don't know. Maybe you and I cannot be in the same room together.
We're not. Anyway, what are you going home with? Okay, I know you were trading.
What am I going home with? To be very honest with you, not a lot.
Okay.
Yeah, I've had moves that I was happy about. Covered my shorts in the Kiwi yesterday. Covered most of my longs in my Euro Swiss. And now it's like there's not much good news coming out of the geopolitical side. I heard a lot of those early backers in Bitcoin going out. It's all and all those markets are moving together, right? Whether it's Nasdaq with NVDA and all those guys, and then the S&P fell out of bed yesterday.
Yeah.
And then you have the crypto, of course, and there's not a lot of really good news around. But in FX, we are talking about 30, 40, 50 pips moves. We are not talking about big changes in trends, right?
Yeah, vol is still low, except for
vol
the
is
yen.
extremely low. If you look at stuff like euro dollar, after the NFP, the vol straight away dropped back. It's a hard call. The interesting thing is that finally, well, no, risk off must have had something to do with it, because the yen followed pretty closely what the equity markets were doing overnight. But finally, we see some natural corrections in the yen, which is going to make the picture perhaps a little bit more healthy again. Takeichi came out saying that she probably will issue less bonds, but we don't know how much less. That's still something for the future. But I heard you guys talk about what may happen in 2026. Well, we spoke about that on the Flow Show as well. So maybe there is a bit of hope for Japan that all those packages can spur growth. And I'm not saying that it's going to happen today, and I'm actually think it's not going to happen today, but that the yen is going to strengthen on its own. But let's see how we do in towards year end, because I really think I'm on the side of Bank of Japan hiking in December, and from then on we will see what's going to go on there. But it's going to be a medium to long term thing. But the good thing is that the yen corrects a little bit. And for the rest, I'm really very much on the sidelines. I keep
Okay.
trying to see if we see a move under 4,000 in gold to see what happens there. But for some reason, 420, 4020, 4030, bids are creeping in all the time. So I'm a bit afraid I'm not going to have this look anytime soon. It's
All right.
holding. I find it holding
Yeah.
very well. I know people are in here or in ForexAnalytix also. A lot of people are looking at the other side for bigger corrections, but
You're
I
not.
just don't see them. I don't see them coming. They should have started already,
Yeah. Yeah.
in my
Sometimes
opinion, anyway.
time. Yeah. Sometimes, well, you saw Grega's charts. He's not looking for much more downside here.
Mm,
So anyway, there's, that's what makes a market, right?
yeah,
So, I really appreciate all the hard work you guys put in
thank
this week.
you.
And I'm talking to all of you guys, Steve, K-Man, Ryan, Grega. Um, really appreciate being part of the dream team.
And
And
thank you
Nice to
for
catch you,
guiding
mate.
us every day, Dale.
working and helping people and caring about what happens to them instead of just, having a revolving door and, next. You know, so it's good to be part of an organization that has ethics in this day and age. So people could feel at least safe with us. You're never going to be safe in the market, but everyone here is looking out for your best interests. So thank you guys. I hope you all have a great weekend. And we're so lucky we get to do it all over again next week.
Absolutely.
All right. I'll see you, Ryan. See you, Kay. See you, Stell, if you're still here, and Steve
Cheers, Dale.
and Grega, all you guys. I appreciate all of you. All right. So we do have a guest today, and it's Michael Kramer. And I've watched some of Mike's videos on the weekends, and he's been, was kind of ahead of not kind of, he was ahead of the curve on looking at some of the plumbing that could, I'm asking you, some of the plumbing inside the market before this sell-off that was showing liquidity squeezes happening in the plumbing. So it's really good to have you, Mike. I appreciate you being here today, and we should have a lot to talk about. So you want to tell our viewers, like what you were talking about on last week's video before we got this sell-off?
Sure, if I can remember what it was we were talking about.
Well, I
Um,
mean, yeah, are you doing them every day now, Mike? Or
not on YouTube. I do videos every day for my subscribers, but
yeah,
I just don't have bandwidth right now to do the YouTube videos every day. I have a YouTube member area where I post stuff every day,
yeah,
but
okay.
not the free stuff right now, unfortunately. I'd like to
Oh,
try to get that going again at some
yeah, yeah, get some of that humanitarianism going, man.
I like to think that I
I,
give a lot of free content away every day, doing my part with my write-ups and stuff. So
you do.
um,
I'm just teasing
I
you.
know you're joking around.
Yeah,
Um,
so I
and I
want to
wanted
give
to
you the
apologize
screen.
first of all. Dale, he had scheduled my last meeting on my birthday back on November 4th, and I overslept. I couldn't even get it
Uh,
yet. So I wanted to
well,
apologize for
no problem. Look, this is what happens in Hollywood in the
yeah.
financial business. So, we're human.
Yeah, it was like the
And
one day a year that I try to sleep a little in, and it was the day I was supposed to be here.
so what are you now, like 31?
I'm 48.
I know. Well, you look good, brother.
Thank you.
I hope this is a great year for you and not just in the markets and, every way. So,
Thank you.
so you've got the screen here, unless you're going to go surfing. I like your background. Maybe you could show us some of, I don't think you were addressing credit risk too much, but you were
Yeah.
talking about, yeah, go ahead.
So let's just start with some of the stuff and that's coming up on the calendar that everyone should be aware of, and we'll kind of run through some things. And I think right now the plumbing of the market is extremely, extremely important because for those of you that don't know, right, if we just go back, kind of to the very beginning, um, there were obviously the Fed did, massive amounts of quantitative easing, and we had big physical spending during COVID. And, that created a lot of excess cash. It created so much excess cash that nobody knew what to do with it. And the Fed had to, had this reverse repo facility that basically is a facility where, I'm an institution, Dale's the Fed. I say to Dale, I don't know what to do with all this money. I give it to Dale, he gives me back collateral, and then he pays me a rate of interest for that cash.
Yeah.
And so this was going on, and we had as much as $2.5 trillion in that account, basically on a daily basis, going in and out, in and out. And this was a good representation, I think, of excess liquidity. And you can see that this is taken since basically March of 23 or April 23 to drain completely. And, we have our friends at the Treasury to thank for that because they've been issuing a lot of T-bills and a lot of debt over the past couple of years. And so the effects of all of that debt issuance wasn't really felt by the equity market or risk assets in general because it was being offset by the excess cash that was in the reverse repo facility. Now, the reverse repo facility is essentially drained, right? It had $6 billion in it yesterday, but just the day before it printed, or 2 days before it printed 1.13 billion, and the day before that, 905 million. So this facility is basically, defunct at this point, right? It's going to be used when it's used, and you're not going to see the excess cash in it like you did.
Why, Mike? Why isn't the Fed knows that there's a, you know, couldn't you call it a dollar shortage? Why can't they add liquidity into the repo facility so that when they go the window, they don't maybe so they don't have to pay such high rates and
Well, so the
SOFR
way
sometimes.
the way this works, right, is that the reverse repo facility represents the floor in the overnight funding market, the general collateral repo market, right? So
Right.
right now, repo rates are trading above 4%, are trading below the reverse repo facility rate. The reverse
Okay.
repo facility rate right now is 3.75, right? So if you're
Yes.
an institution and you can get 4% for your cash, you're not going to use the reverse repo facility. So overnight rates are now higher because of so it's not going to go into the reverse repo facility because essentially the cash has been put to work. So there's just not enough cash in the overnight funding market anymore to push rates that low that you're going to have to go into the reverse repo facility. Right now, actually, there's a shortage, it seems, of cash because what we've
Right.
been seeing based on SOFR, which is a measure of the secured overnight financing rate, it's been trading. You have to remember the Fed cut rates here, so that's why it dropped. But you can see that, at points SOFR was trading over, 4.25%, which is actually above the effective funds rate upper bound. And that's also above the standing repo facility rate. So the Fed has a base, which is the reverse repo facility. And then when institutions need cash and they're short on cash, they can go to the Fed window and give the Fed collateral, get cash, and then pay a 4% rate to borrow that cash. So
Okay.
essentially, you have the Fed trying to quarantine the overnight funding market in a range of 3.75% and 4%. So because cash has been depleted, as noted by the drain and the excess cash has been depleted, as noted through the reverse repo facility, because it's been put into the Treasury market. there's no more excess cash floating around to drive overnight funding rates back to that floor. So the only way that you start seeing the reverse repo facility getting used again is if there's a flood of cash that comes into the system. One reason why there could be a flood of cash coming into the system is because the Fed decides to start expanding the balance sheet again. Or it could be because people are starting to sell risk assets and they want to put it into a safe haven. So they put it into their money market accounts. And then their money market accounts started putting that money into the reverse repo facility. I don't think it's by chance yesterday that we saw this big sell-off in equities intraday, and you saw a $5 billion uptick in the reverse repo facility, right? If you see this number go up again today, it's probably because people are selling risk assets at this point. That's what that would mean.
Okay.
If you get to a point, though, where the Fed says they're going to start expanding the balance sheet, that's different dynamic. So the problem is right now is because the reverse repo facility was drained out of $2.5 trillion, basically because the Treasury has been issuing all that new debt. When the Treasury issues new debt, now there's no place for the money to come from except for the markets.
Okay.
And so
All
now
right.
next week is a very important week because it's a holiday, Dale, right? It's Thanksgiving.
Right.
We get
Yeah.
that day off on Thursday and we got that half day on Friday.
Right.
Well, look what the Treasury decided to do. On the 25th, we're settling. I'll move this over so you can see it. We have a $14 billion settlement yesterday was a settlement date, by the way. So we're going to keep a pattern here, right?
Yeah.
And so, Dale, what I want you to do is pull up a chart of the S&P 500, and then I'm going to tell you a date, and you're going to tell me whether the market was up or down and the amount it was up or down. Okay? So let me just do this part first, and then we're going to go back and
Okay.
do the experiment.
All right.
So on the 25th, the $14 billion is due to settle. Then on Friday, the 28th, we're going to get a $47 billion settlement and a $5 billion settlement in coupons and bills. And then when we come back from our long weekend, because not everyone works on that Friday, the Treasury is going to give us an $84 billion settlement date on the 12th, on the 1st. So now, Dale, I want you to go back and tell me, was the market up or down on November 20th?
Let me look.
That was yesterday.
Right. All right. Oh, yeah. Down hard.
Okay. Was the market up or down on the 18th? Another settlement date.
I'm just looking for my S&P chart. You put me to work today, buddy.
I know.
All right.
You got to earn your keep.
All right. So, what day are you
The
talking about?
18th.
It was a down day.
Okay. Was it down a lot?
Probably about 3%, 1% or something.
Okay.
And yeah,
What about the 17th?
down just a shade.
Okay. What about the 14th?
Kind of unchanged.
Okay.
Lower, but came back.
Okay. The 13th. Just tell me if it's up or down. It doesn't matter what it did.
Okay. 13th, down.
The 12th.
That was that was an update.
Up day on the 12th?
Yeah, a little like very tight range, a shade higher.
Okay. What about the 11th?
On the 12th?
Big up day, right?
The 11th was up,
The
pretty
10th
good.
was up.
That was after the second save on a Friday.
Okay, so the 10th was an up day too, right?
Yeah.
And the 7th was an up day?
Yes, that was a reversal
I'm going to
day.
guess and say the 6th was a down day.
Yes.
I'm going to guess and say the 5th was an up day.
Yes.
I'm going to guess and say the 4th was a down day.
Yes.
I'm going to guess and say the 3rd was an up day.
Yes.
I'm going to guess and say the 31st was a big down day.
31st. Yeah, it was down.
Okay.
Friday the 31st. Yes,
Okay.
Halloween. Yeah.
All the dates we were down, with the exception of the one on the 12th, were Treasury settlement dates.
Well, what a pearl. What an insight. So you do you do any so you can it's really
So now
we
next
could
week,
we could throw our charts away and just look at Treasury
yeah. So now
settlement
next
days,
week,
huh?
the 25th, you're going to be. So based on this theory, right, we should be down on Monday, and we should have a really bad Friday of next week.
Okay. All right.
And then on the Monday that we come back on the 12th, on the 1st, who knows? It could also be a very big down day because there's a lot of cash getting sucked out of the market.
Okay, so here's and you're a great technician too. I mean, I've seen you talk technical analysis,
Right.
but what an edge you have being able to, I wouldn't be able to understand this without you explaining it to me.
So, I mean, I think the leading indicator right now has been Bitcoin.
Yeah,
And, Bitcoin right now was down whatever, 4 or 5% earlier, and it's bouncing
it's
back
coming
for
back.
some
Yeah,
unknown reason. But today's not a settlement date, by the way. So there's probably a little extra cash floating around in the marketplace. Generally speaking, I mean, if you take, I have this chart here, right? And again, this is something I'm kind of experimenting with. I wouldn't say it's perfected. So what I've done here is I've taken the SOFR volume plus the reserve balances, which gives us this black line here.
yeah.
Basically, it kind of gives me a sense of what total liquidity is in the market, although I'm not really thrilled with it. It's okay. I kind of have something else that I've come up with that's a little better. And here's your chart of Bitcoin. Now you have to make sure these are both on. Let me just merge this into one, and then let me just pin rates. So this is the one I want to do. So this is a chart. The blue line is Bitcoin, and the black line is SOFR versus reserve balances plus SOFR. I think I have the offset off a little bit. That's better.
Pretty tight.
Pretty tight, right?
Yeah,
Not great, but it's pretty tight.
yeah.
Then you add the NASDAQ in on top of it. There you go.
Yeah.
So what I found is that it looks to me like the NASDAQ trades a little bit behind Bitcoin, and Bitcoin trades a little bit behind liquidity. What I'm kind of confused, I guess, about on my end, or not, I should say not confused about, but not sure of, is which one is really the more appropriate reading. Is it the SOFR plus reserve balances, which gives you a pretty tight correlation between the S&P, which kind of tells you we're just starting a down move? I'm sorry, which is this one right here, which is also just telling you we're starting some sort of down move. Or whether it's this one and it tells you that there's a much bigger down move. This one measures a different measure of overnight funding liquidity. So, I mean, these are two different things that I'm kind of looking at right now to kind of figure that out. But I mean, really simply, you can just almost take a chart of, you can take, if I get rid of this one. Oh, they're running a Black Friday sale. Look at that.
Yeah,
yeah. But if I take this, where is it? Here's your reserve balances, right? And this is on a weekly chart. But then if you just take Bitcoin, I mean, it's kind of there. Again, it's best to look at these, I think, on a log scale. You can see, I mean, the market, Bitcoin has basically been coming down as, overnight, the Fed liquidity levels have fallen. And so, I don't really know where this, you can clearly see they diverge from one another. And that could be because some of that excess cash went into the overnight funding market, and that cash is getting recycled somehow back into, risk assets. But, clearly there's been a big separation gap between the two.
okay. So with all of this and what you're looking at, Mike, do you think a 15% correction in S&Ps is in the cards?
It's possible. I have one thing I can show you that can maybe give us a hint. If I can find it. Oh, here. So this is a chart that tracks the S&P 500 market cap divided by those reserve balances. And I mean, you can see for the most part, starting after QE until this period right here in the middle of 23,
Yeah.
the market cap of the S&P typically was around, call it, call it like 10 to
Okay.
11 times.
Yeah.
Now we're at 19,
Okay.
right? So I don't know where the right number is, but clearly, from that perspective, the market is really stretched. I think the other thing that's really interesting is if you look at margin balances versus reserve balances.
Do you think there's been a reduction in margin with what
No,
happened
there
this week?
hasn't been yet.
That's not a good sign.
No, this is the balance sheet. This is the S&P. Hold on, I have one here where I have margin in it. Uh-oh. Something just...
FINRA margin.
Yeah. This is a chart showing you margin balances versus reserve balances.
Wow.
You can see the two kind of go together. Look at that.
That's a
And the
big
last time that
divergence.
happened was here. You remember 2018,
I do.
right? And so then what happened? Reserves came
Crank.
down and eventually you saw margin come down. So
Yeah.
it really all depends about how much leverage we're talking about here.
Yeah.
I am running another, Dale knows I like to run analogs. So I have an analog, but this isn't of the 1990s. This is of 1966, a little
Wow.
before my time.
I
And
had my bar mitzvah was in 66, Mike.
oh, really?
I became a man that year when I was
Yeah.
13.
You
Now
remember
I'm
that
but a
Seinfeld
now I'm
episode?
but a boy.
This is a chart. It compares the S&P 500 today in red versus the S&P 500 in 1966.
Wow.
So this is actually an analog I started tracking back in 2021, 2022. You can see how it nearly called the top perfectly,
Yeah.
called the bottom here, July of 62 with the bottom we had in that June of 62. Here's that October of 22 low with October of 62.
Yeah.
Then we had the rally. We had this pullback, wasn't really in the analog, but you could see the analog had a big drop here.
Yeah.
Then we rallied more, and you could see how the dips kind of go with each other.
Yeah.
And then there was this whole thing in here, which I didn't really know how to deal with because it looked like the analog broke. But then I was like, well, wonder what happens if I move this forward a little bit. Let's say the analog timing just changed a little bit. So I moved it forward to kind of compensate for, and you could see how it still lines up really nicely, how this low
Yeah.
almost lines up with this one and this one. And so this is telling you we're coming down.
Yeah.
And so, again, like I look at this and that was a 7% decline. We know that the S&P is already down 5.
Right.
So, I mean, this is only halfway through it. So that means you can get to 10, maybe, and then
Okay.
maybe you bounce, and then maybe you
Yeah.
come back down. This is on all about a 22 to 25% correction in the market.
Wow. That take you back to what?
Uh,
4,000 S&Ps?
22%.
60,
No, I think it would take you
1,200,
back to
um,
I think it would take you back to,
58.
yeah.
And that's I think a wave 4 of lesser degree at 48.
Yeah, I think it would take you like if you were to go
58, I mean.
if you were to go from the only thing that concerns me is that we seem to be going twice as fast. But if you look at 22, yeah, it takes you back to around here,
Okay. Wow.
which I think there's actually a gap. Gaps.
Yeah, the gap's on the way up from the April low. I
Yeah.
think there is one there. It's also, I think, a fib too, if you do it.
So that would be the
Wow.
gap. And then here's 22, takes you right into this gap,
Wow.
right around 5,300.
Okay.
So I mean,
Really?
you could make a case. And here's your 78.6% retracement. Well, who
Yeah.
knows?
Yeah.
I
I
mean,
was thinking maybe,
you can
yeah.
see though, like you can think about it though, right?
Yeah.
If there's money being sucked out of the market and there's no more excess liquidity in the marketplace, where how is the
That's,
market going to continue to rally? And I think
yeah.
there's another, if I can just hold on a second. There's a way you can monitor liquidity to your standpoint, right? The CME group has this free website. You just have to make a free account. And you can monitor, your S&P 500 futures book depth. And I know that this doesn't really mean anything when you look at it, but when you go back and you look at it from a bigger perspective, I mean, the liquidity in the market maker liquidity is just gone. Look at that. You're talking about we're back to levels in terms of top of book that we were at in April and May. It's collapsed, right? That's another sign
Yeah.
to me of liquidity. And then I like to look at things like the bid-ask spread to kind of also give me a sense of liquidity, right? Because market
Yeah.
makers will pull back. You can see it's risen.
Yeah.
And then I'll
So the
also,
spreads are wider because of
right,
liquidity or
because liquidity is
something.
down. And I don't know if you take 100, S&P 500 E-mini contracts, the cost to trade, you can see the cost of trade has gone up pretty sharply here.
Yeah.
So I mean
Spreads
that
aren't as
kind of also
tight.
tells you
Yeah.
that's why we're seeing these giant intraday moves, and you have it your option positioning is now negative gamma, so we know market makers are going with those flows. I've been calling this the perfect storm setup since July. I didn't obviously anticipate a couple of other little things, and I know we probably have a hard stop at like 9 o'clock or something, but obviously I wasn't anticipating this happening either.
Yeah.
And I wasn't anticipating the yen kind of
Yeah.
doing what it's doing,
Me
what
either.
it's talking about,
Yeah.
which
Okay.
is
So
another
that,
factor. Because
yeah.
the one time I came on, we talked about overnight funding costs for FX cross currency based swaps.
Yeah.
And when the yen's weakening like this, it could mean that there's just also going to be more demand for the dollar. And if there's more demand for the dollar, does that mean that overnight that the cross currency basis swaps begin to move towards that? And you can see that the Japan 5-year swap for the yen has moved down to 39, which isn't a big thing, but again, when you look at it versus the S&P, oh, there it is.
Yeah.
You
Yeah.
can see the relationship, right? So there's just
Right.
liquidity getting sucked out of the market in every which way.
Okay. Heed that warning from Mike. I watch your stuff and I've learned a lot from you, Mike. So I'm
Thank
sure
you.
people watching this, and we're live on X right now too. So
Oh, okay.
everyone on X, follow Mike at the minimum at Michael Mott CM. And why don't you show or tell people where they could, watch your work on YouTube and your business model and what you're doing.
Sure. So let me
Good
just
stuff, Mike. Real good stuff.
what's that? Oh, thank you. So I have a Substack called Navigating the Market. I write a free blog every day for people who just want to read, and I like writing it because I feel like it helps to fill out the day that we were talking about for my member area. But
Yeah.
I'll go through lots of different things, and then of course I have a paid membership area. But then I also have a YouTube channel where I was posting. Today's stock market can feel more complex. Where I was posting videos on a daily, like a not a daily basis, but maybe like a uh 3 times a week, 4 times a week. But I just have been really busy. But I do put out a Saturday video almost regularly. I don't think I've ever missed a Saturday. Usually I put out a Saturday video somewhere between 1 and 3 because that's when my daughter's at dance. So the house is quiet. So I usually put out a video Saturday between 1 and 3. Very rare that I've ever missed it, even when I'm on vacation. So you can certainly look for those. I do have a members area, the one I have, where I have different levels of options where you could choose from. Otherwise, I mean, I'm on X. I post a lot of free stuff on X. Um, so that's not a problem.
Learn from this guy.
And then I post a lot of stuff on Seeking Alpha. I think, one of the biggest problems I've always had is trying to explain to people like what my process is overall. And I think, the market today is so short-term oriented that I think that a lot of people kind of miss the idea that what I'm trying to do is lay things out for the next few months as opposed to what's going to
Next
happen
2
next week
days.
or tomorrow. I mean, sometimes
Yeah.
I'll give a shorter term project view, like
Yeah.
if there's like a big event, like, NVIDIA results or something, but otherwise, like I'm really trying to like write about what's going to happen over the next 6 months or so. Like I try to get in front of everyone else. And so that's what I'm really focused on. So if you want to get a sense of maybe what's coming, I'm a
Yes.
good person to be watching. If you want to know what's going to happen tomorrow, probably not so much.
Yeah. And if you want to know why things happened, all you have to do is read the reporters.
Yeah,
The reporters always tell you why after the fact. So,
after the fact, right?
yeah. So, there
But
you
it's
go.
nice to know before.
Yeah, Mike Kramer, like Wayne Gretzky, skating towards where the puck will be.
Right.
So, Mike, thanks so much for coming back. Again, I hope this is a great year for you, and
Thank you.
you wind up the year.
I hope it's a great year for all of us.
Yes, and we'll be talking probably around February. The world will have changed, I think, by then.
Whenever you want, you let me know.
All right, Mike Kramer, everybody.
Thank
Follow
you.
him on X at Michael Mott CM. Go to his website, read his stuff, and learn about the plumbing of what gives us the candlesticks that we're trading. And that's a wrap. So don't just count your overnight repo rate, count your blessings. And I'll see everyone Monday. You're welcome. People are thanking you, Mike.
Thank you.
All right. So that's a wrap, everyone. Enjoy your weekend. Adios. See you, Mike.